We will be the biggest cheerleaders of our founders when things are not going right, so that we can help them, we can this thing, and we'll be the biggest critique of the founders when things are going too right, because that's the time when you lose your path.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Anand Datta with us. Anand is a principal at Nexus Venture Partners, where he is focused on investing in early stage seed and Series A startups driven to solve large impact challenges. He's particularly interested in Fintech, Insuretech, SaaS, health, and solutions for Bharat. We talk about Anand's story and how he started investing, investment thesis at Nexus Venture Partners, deploying the recent $700 million fund, Indian startup ecosystem, how Nexus supports portfolio companies, and lots more. So without wasting any time, let's dive straight in. Hey Anand, so good to have you on the VC 10X podcast. Just to start things off, can we have some of your background story and how you started investing?
Yeah, it's like uh, I have done multiple things in my life and donned multiple hats. I started off my career as a strategy consultant with Bain. Spent like 4 5 years over here, most of it in India. Some part of it went on transfer to the US, and that's where I was on the transfer to the Valley office and saw what tech is doing to the world. Came back, jumped right into the startup ecosystem. I was founding team member of the startup called Magic Pen, which is into consumer internet. Was heading BD and operations over there at there. Saw the very early 0 to 1, literally 0 to 1 journey over there, because I was in there from the first day itself, hiring the early team and everything. And then moved on to do my own startup. Saw the failure over there where I could not raise enough capital and we shut down the company. Then started working with this Swedish Insuretech company called Bima Milvik. I was their India CEO, was supposed to launch India, set up their global tech practice from here, set up the team, hired a CTO here. I moved to Philippines to launch them in Philippines, then helped them in Malaysia and helped them in Indonesia, and sort of started heading them in their growth markets in Asia from Singapore. And that's when Nexus happened for me. Got in touch with Nexus. They were hiring from the India office, and I always liked the Nexus folks. And investment was something which was on always in back of my mind, because in operations, as you start working more and more, well, it's great experience, but at the same time, your view starts becoming more of a tunnel view, and then you are, somewhere. Even from my consulting days, I had liked more broader, more horizontal learning, and those learning curves had attracted me, and that's where Nexus, when it came, the offer when it came, I was like, yeah, I have to get into investing. And I frankly have loved every day of investing, like so much of learning, so much of just raw adrenaline going on in the Indian startup ecosystem. I think we are at a cusp of explosive growth, which is already happening. We're not even at cusp, it started. So the amount of learning you get, amount of interesting people you meet, investment opportunities in exceptional founders that you get, it's amazing. And then that's what, even before I've realized, now I'm what, close to 4 years into VC investing. Time has just flown by.
Right, absolutely. And since you've been one on both sides of the table, being a part of the founding team and like growing a startup and stuff like that, and now being on the other side of the VC table, which side do you think is more difficult or maybe more exciting to you?
Both side has its own pros and cons. I know that's the diplomatic answer to give. You know, it's definitely more difficult to be a founder. I would say that, and then that's coming from my personal experience, because I'm a failed founder. Whether I'm a successful VC or not, only time will say. But uh, but frankly, when I was a founder, I could pull off only so much. Obviously, you learn a lot, but the mortality rate in the founders, because you are all in, is much higher. So the stress levels and everything is obviously much higher. In VC, it's still a little diversified, and while you go through your stress cycles, but it definitely cannot be at the same level when you're all in into one hand. So that's definitely higher. Secondly, also as a founder, like, you're constantly responsible to your investors, your customers, your employees, and everything you're with. So definitely, I would say that if you force me to say what is more tougher, definitely being a founder is tougher than being a VC. That said, VC and investing has its own nuances. it's not very easy to take those decisions. It's not, especially as an operator, it's not very easy to suddenly be not in the driver's seat, but you have to make this acceptance that you are the navigator, probably at best raising the right questions, then even giving the right answers, and helping guide the founders. And while you are diversified, your energies and context switching is also 10x higher than when you are focused and working on, let's say, one startup only at a time. So for me, every day while you are doing deal sourcing and deal evaluation at the same time, you have to quickly context switch and be present there to help your founders whenever they require, in terms of thinking your mental bandwidth and your overall bandwidth as well. Uh, so, net to say, personal opinion, very personal opinion, definitely founders, being a founder is much more tougher job, much harder job, and that's where the risk reward probably outcome should be better. Failure rates are also higher, so it's a stressful job. VC has its own nuances and own stress parameters, which I would not trivialize.
Yeah, absolutely. And now being on the VC side of things, so when you started your like first role in the VC space at Nexus, like when you just came in, what were the things that were told to you that okay, this is how we operate at Nexus, or maybe this is our investment thesis, this is how we invest. So walk us through those initial days and what was the guidance that is provided to a new VC who's just coming in and how things work at the VC side of
Yeah, by
things.
the way, I missed answering another question of yours, last one. Sorry, I'll just touch upon that because it's an interesting question. I think
Sure.
whether what is more exciting, being
Mhm.
a founder or a VC? Definitely being a founder, I find it more exciting. It's just that it's more tougher, but definitely more exciting how you go from zero to one, and uh, so much more energy. You are working in a team. As an operator, I have always been used to working in a team. The way I try to do it in VC is that probably work much more closely with the companies and the founders to have some osmosis of that energy and excitement, enthusiasm. But the answer to that question, what is more exciting, is definitely being a founder is more exciting. But it's also so many more degree tougher. Uh, if the question then is that why am I in VC then? Because I probably find this fact exciting that I am able to work with 10 founders at a time instead of being one founder myself. And then I have started liking that osmosis process where I'm able to drive that energy from somebody else than doing it myself. So that's what keeps me excited. Now, coming to your question of once I joined Nexus, what are the some of the things that what was what has been helpful in terms of guidance to me? One was, as an operator, when you come into investment, you have to shed off many of biases that you have developed as an operator. Because right now somebody is, while experience helps, in the startup ecosystem, especially at the early stage, there is a much more leverage or much more power out of first principle thinking, because you do not know what can work out. Now, one of my friend who was VC told me very early on in the journey that it's very easy to reject, uh, all the deals, because that's frankly what happens. Like, you are bombarded with hundreds of deals but you probably invest in one of them. So it's easy to reject one of hundreds of deals, but your performance as a VC depends on that one deal that you do or one deal that you don't miss, which is supposed to go large. So the art or the science of it is that, uh, can you open up your eyes and see the possibility that, hey, I know that this 100 things that can go wrong, but if this one thing that goes right, and if this is the right person who can get that right, how big can that be? And with that philosophy, you have to you have to strike the balance where you are pressure testing to find genuinely life changing founders who have the founder market fit into the problem that they are going into. At the same time, have an open mind into saying that what is the possibility that they can work into. So that's and in specific in
Yeah.
terms of Nexus, since you asked, like, the approach that we have followed always is founder first. One thing I realized, and this was not a tip given to me, but that's something which I learned over the way in the last 4 years, that we do so much of intellectual time spent on spaces and how it will form and all. And when you're doing very early stage, all that doesn't matter, because uh, broad space or the area matters, or the problem statement matters, that this is the problem that we are going after, and the founder market fit to that matter. So highest weightage on the founder and how he's going to crack that space, and does he have the founder market fit. Because all this idea and thesis that we develop, that sort of pivots, that sort of changes shape, that sort of transforms. So that's another learning that I took up, and that has been the Nexus style also, to always be bottoms up. Like, think along with the founder on what are the key insights he has, or the unique insights he has, which can drive outsized returns over there.
Absolutely. Yeah, I love that approach and that insight as well. That as a VC, you are a lot of times judged by the one big company that you passed on, right? Because maybe you saw some red flags and you said, okay, no, this won't work. But like you said, maybe a better approach is to flip the question and think about what is the possibility that this works out, and if this works out, then how big
Yeah.
can this get, right? And if you think from that mindset, then maybe you are able to catch more of the companies that can like go big, because there are always 100 reasons why something might not work out, and that is not within just the startup itself. There can be reasons outside the startup for which the startup doesn't work out, right? There can be market factors, a lot of other things as well. There can be COVID, or like we saw in the US right now, SVB, kind of that kind of situation can happen, although that was tackled. But yeah, there are a lot of reasons why startups could fail. And as VCs, then maybe you should start thinking about what can make this work, and if this does, then how big does this get, right? Great approach. uh, Now let's talk about what are the key things that you look for in startups while evaluating them, because I know that since Nexus is a reputable name in the VC space across the world, then you're being pitched by a lot of companies. Are you just only indexing on the founders, that okay, there is a strong founder market fit, then we can go in on the deal, and or there are more factors that you're looking at? If yes, then what are those factors?
Definitely, and the founder market fit has the highest weightage, I would say. Many a times we do take seed bets where we say that, like, the space is right now, we do not get it. We are trying to learn with the founder, but this is a great founder. Let's back him. He will definitely do that. And those are ones far and few in between, but we definitely do that. And those are probably absolutely the pre-seed venture checks. Generally, there will be multiple layers of other things that we'll look into it, right? Like that, uh, when the founder comes in with a proposition, we'll see whether the timing is right to do this or not, whether the space is large enough that even if you solve for, let's say, a deep problem, but it's a niche problem, then will the outcome be large enough or not. Whether like when you say the founder market fit, multitude of other things below that, like whether you'll be able to attract talent, whether you'll be able to like create the best team who builds in there. We look into moat, we look into competitive advantage, that why is it that you will be able to build it, and tomorrow if you build it, like when competition comes, how will you defend it? So it's not that straightforward as just indexing on the founder. There are different weightages over there. I would say that broadly you can divide it into the founder, the space, and the business model. But below that, multiple layers of the questions comes in on how you evaluate.
Yes, absolutely. And recently, Nexus announced a $700 million India-focused fund. And within that, what will be the focus for Nexus? Like, how will this new fund be deployed with bigger number of assets under management?
So one very small correction. Nexus has always been a one fund, one team structure. We have a team out of Menlo Park as well. So we do deals which has been cross-border
Hmm.
and in focus on the US market as well. We do not
Right.
differentiate that this part is India focused, this part in the US focus. Like, we have one
Got it. So it's across the
across
world,
the
right?
world.
Across the world fund.
Typically, we do have some sort
Hmm.
of India or SaaS or some themes over there. So whether we'll go and invest in Africa or Latam, it won't happen. So the focus, or this has been much more in US and India, some part in Europe, some part in Australia. We have a couple of companies in
Got it.
Australia as well. So we are truly a global fund in that matter. But obviously we stay. super overweight on India, and then that's where and the bulk of the team is in India, and we have strong connects with our colleagues let me put it this way, our colleagues in US also have strong connects to India. So there is definitely a huge affinity to Indian founders, but we remain a global firm. Now, coming to your uh, uh, question around what are the spaces that we will invest in. The Nexus was originally started with this with simple thesis of India is a sort of a mix of Israel and China in a certain way, where like China has been driven by the internal consumption story. So we'll see the digital consumption story in India rise, whether it be in consumer, in B2B commerce, in fintech. There will definitely be a rise. We are seeing the macros play out. We are seeing the digital infrastructure being laid out, which is creating the inflection point at which it inflexes out. At the same time, the original thesis in India in Nexus was also that there is a lot of tech talent out of India which is going to build global products, and we were the earliest and the foremost in backing the cross-border companies or organizations coming out of India, be it Postman, be it Hasura, be it Dhruva. A lot of these success stories have played out. So that means both these paths remains a very, very strong thesis for us. As we have been doing more and more software investments, we have the sort of investments and the sort of outcome you see, we have become a very big global reputed fund in global software opportunities. So you will see us taking a lot of those bets also, which are global in nature, but coming out of our deep expertise area. Uh, so, so these are the broad 2, 3 categories that I would put in. We do not go by, as I mentioned earlier, we are not a space-driven or top-down driven fund. So we'll not go by a strategy of, hey, we have to put in this much in India, this much in US, this much in global, this much in SaaS versus this much in consumer. We will stay very bottoms-up investor where we will love to learn from the founders as and when they come on why that is the right opportunity to back, and then we'll back on that particular opportunity to opportunity basis rather than going spaced down into the area.
Right, absolutely, and that was a great way to like put India into perspective. That it's a mixture of maybe China and Israel, two very strong startup ecosystems, uh, individually as well, right? And like if we go deeper into how do you look at India and the entire consumers market that there is in this country, then can you give us insight into that? Like how do you look at the Indian market in general?
So Indian market is a very, very interesting market globally. This is a market, obviously nobody can deny the macro tailwinds that it has, because we are fast becoming one of the largest markets in the world. Our GDP per capita is low, but at the same time, it's growing at a very fast rate, and it's crossing a certain way hurdle. I would say rate or certain hurdle this thing barrier, uh, post which you see a lot of the consumption unlock. So definitely there is a strong tailwind for consumption. What is more specifically interesting is India is a market where the digital adoption has, uh, leapfrogged the physical infrastructure or physical adoption. So we are a market where, if you say financial penetration digitally is much higher than physical financial penetration. People have generally all the countries have gone through that journey where you have bank branches built up, people start opening bank accounts, and then here we have UPI and all, where everybody is paying digitally. Everybody is opening a bank account digitally now. Like you have Paytms of the world, huge penetration, and that those enablers have driven huge penetration uh, of other consumer products. Like look at gaming, look at social. The way it has been adopted in India is way faster and earlier than a than a country of a particular GDP per capita. So that's where we are very positive about the overall outlook on consumption in India. That said, people will have to accept the reality also that we are a low GDP per capita, low ARPU country. Thus, the valuations at which some of the consumer bets have been backed in India, just copy pasting the multiples from West, is not really the right way to approach investing in India. And then, given that, we will not be surprised, because I think surprised will be wrong, because most people know that. But the valuation has outpaced the GDP per capita or the depth of the consumer market in India, and that will give some worry to the early stage investments that has happened in the last 3 4 years of core. And I hope and believe that uh, the larger fund sizes that the early stage investors, including us, we have raised, does not take us away from the discipline of maintaining a certain valuation for a certain opportunity that is available in digital consumer in India.
Yeah. Yeah, that's a very interesting take on the valuations, especially because it's often commonly believed in the founder community that okay, you should be able to get a 10x multiple when you're driving at the valuation, and that's what you get maybe in the West. But how do you think then maybe if that's not the correct number or not the correct multiple, then how should the founders be correctly deriving at the right valuation for the companies?
No, look, 10x multiple is like, if things are happening 10x multiple, that will be awesome. Things are not, right? Like, because see, a that 10x or median multiples and everything is holding for SaaS revenues in most of the places. That's not true for consumer revenue. Consumer gross margin profiles are very different from the SaaS gross margin profile. Consumer quality of revenue is very different from SaaS quality of revenue. The SaaS ERR actually means recurring revenue. Consumer revenue doesn't mean recurring revenue. It has a certain pattern and certain probability built over there. So as they are looking for valuation, the I would suggest that obviously if you have a certain revenue or a certain path to profitability, you will still get valued in a certain way. What is outstripping is the size of the market on what is being extrapolated. Is that if you have a certain ARPU in, let's say, Bangalore, you are going to get the same certain ARPU in Patna. That's just will not happen. So as you extrapolate based on your early data, how large a TAM you can become, and thus what is the valuation that you are trying to drive towards, you will have to, as investor and founder, also stay realistic for it. Because otherwise, what will happen is that you will reach to a certain valuation, you will feel very happy, but as you try to grow beyond that, it becomes a painful journey in terms of raise and this. So frank admission is that if you're getting that valuation, if people are ready to value, it's awesome. You should take it. Like cardinal rule for most of the startups has been that when you're getting the money, take the money and keep building. Uh, what the investor has to do is be realistic about the valuation. What founder has to do is that stay realistic about the business. Just because you have reached to a certain valuation does not mean that the business has reached that maturity. And then what you are building towards and how do we grow into that valuation, you'll have to stay brutally honest about that to yourself.
Yeah. Yeah, that's definitely a very needed narrative in the ecosystem right now. That, and especially in a harder fundraising environment, like you won't get the kind of valuations maybe startups were getting a year back or two, and now with a difficult environment, there is a stronger focus on fundamentals, and you to have your numbers in place. Only then you get a decent valuation, right? And also, like another aspect we can touch upon is that if you're always optimizing for valuations, then maybe you get the valuation, right? Let's say you got it right, then what about the next round,
Exactly.
right? There is
Yeah.
also going to be
Yeah.
a subsequent round,
Yeah.
and if you do not fulfill the promises or the projections you made in this round, then in the next round you'll be in trouble, and then you'll be debating should I raise a down round or not, because that
Yeah.
is not considered a good thing, right?
Down rounds can never be a good thing for a startup,
Yeah.
not for the employees, not for the investors, not for the
Mm.
founders.
Yeah, absolutely. All right. So now let's move on to the value add aspect. Since like Nexus has now established into a very reputable fund. So how do you like support your portfolio companies and founders in succeeding?
Yeah, we tend to believe that we become their partners in crime. Like for us, we are not. If you see the common theme in all the Nexus investors, and why I picked Nexus also when I wanted to work in VC, was that most of the folks are either entrepreneurs or operators in their early lives. They have seen this journey, so we become partner in crimes with the founders, and we ask any of our founders. We'll be brainstorming with them. We'll be opening up. The smaller tactical things everyone will do. Nobody will go and tell their founders, hey, I'll not make you connects, I'll not open up networks. At 1 to 1 degree, people will be able to make those connects, networks, bring in investors, help them in things. What is more important is that as you are in the part of the journey, uh, who is your right partner in thinking? Who will raise the tough questions? Who will talk to you and on the most important strategic decision and be truly honest with you and open with you as you think through, and have at the same time in your hard moments be willing to empathize with you because they have been founders before to know that how difficult this journey is. So those are the few things where I think Nexus has inordinately excelled. I still remember the one of the to your earlier question, one of the earlier thoughts I got from Naren, who was the founder of Nexus, was that like we will be the biggest cheerleaders of our founders when things are not going right, so that we can help them, we can this thing, and we'll be the biggest critique of the founders when things are going too right, because that's the time when you lose your path. So that's the philosophy that we maintain, that hey, you're doing very well, we are super happy for you, but we'll be writing you the asking you the right questions which help you sustain and maintain on that path. And if you're not doing well, then we are not going to dump you. Like we are not those investors at all who like, because and we take very concentrated bets. That's the one of the reasons we do not spray and pray. There are VCs who, if you're not doing well, will stop coming to the board meetings, they'll stop picking up your phones. You can ask any of the Nexus invested founders. The way Nexus works with you when you are not doing well is very, very different, and that comes from the empathy we derive from the founders, where we have seen how the companies, if you keep at it, if you grit it, works out. Uh, that's the motto of Nexus, I would say.
Right. Yeah, that's great. And that's when the founders actually need the most support in times of distress when things are not going well, right? So it's great that you're there for them in that time. Right. So the last main question for you that I have before we move on to the rapid fire round is about what's something that you've learned in this 4-year venture journey that you wish you had learned at the start of your venture journey when you're starting out investing.
Yeah, I mean, it's an interesting question. Like one of the biggest learning has been, I don't know how to put it, articulate it. It's about grit. That uh, things which we are thinking is successful now does not remain successful. It's such a long feedback game, this venture investing as well as startups are, or versus things which we are thinking is
Right,
is
right,
a
right.
is a completely done deal now. How it changes and moves into being something very successful in future. And then all you can do is that uh, keep increasing the surface area or the probability of success, because frankly that's all that matters. You can control your input metrics, you can control your input parameters, and as you keep doing that, you assume that it will translate into the success, and you have to be at it. uh, while I always knew about grit, I've always read about grit, but seeing that out there in play, uh, that's obviously has inspired me a lot. And I've started putting that weightage a lot more on the in the founders uh, than pure talent. Believe me that this is the related second degree of this, is that my learning has been that how much the grit and pure hard work and just the founder market fit can win over pure talent. Uh, that's been a learning for me.
Yeah. So how do you differentiate between pure talent and founder market fit? Like, can you give us an example where these are two different
So,
things?
for example,
An example where there is talent, but that there's no market fit, founder market fit.
like every second day, I will get a person who's, let's say, IIT, IIM, Harvard, Stanford, coming top down from saying that I want to do a startup. What are the areas which are hot, and what can I focus on, and then start building on that, right? Beautifully, like amazing talented people. No, like if you have gotten into all this institution, there is no chance that you are not talented people. You are very, very talented people. You have extreme talents in some areas. There are very spiked people. but you have not had a unique insight. And since your unique insight is derived from, let's say, a person like me or anybody in the market, your ability to grit out on the unique insight is also limited. uh, Once you have seen that in action coming from that area, and you having captured that unique insight, you feel your ability to just grit it out from five different angles if one angle is not working is much higher, and that increases the probability of success much more than your pure IQ levels, or your pure academics level, or your pure intellect per se.
Absolutely. Yeah, I love that take. And I'm sure that you get that question a lot where like talented people come and ask you. Since you are in the seat of a VC, you always have a bird's eye view of the entire industry and how which sectors are behaving the best, where the money is going,
And
what are investors most excited
correct.
by,
And trust me,
right?
there is nothing wrong in
Yep.
that. Like, people do market research all the time, and they are right in
Mm,
approaching us that we have a
mm,
vantage point. We know what is going where.
mm.
But I would suggest that that should happen at the second degree, where first you have identified a pain point, and then you come and brainstorm with me that, hey, in this pain point, XYZs had taken one approach earlier. What happened over there? What is happening in US versus, let's say, if we are trying to see this in problem in India? And that's an amazing brainstorming session. You are still coming with a unique insight versus somebody coming in and saying that, I am an awesomely talented person. Why don't you give me five bucketed areas on which things are hot right now, and I will start working on that. uh, I would suggest that that conviction layer there will be tough to build on.
Yeah, absolutely agreed. All right. Now let's move on to our rapid fire round, wherein I'll ask you five quick questions about the investing that you're doing through Nexus, and you have to give five quick answers. So the first one goes: what are the sectors and regions you're investing in?
Mostly in fintech and B2B commerce. I have done SaaS investments as well earlier, which is half my portfolio are SaaS companies. And I'm assuming you're asking about me and not Nexus. I invest mostly in Indian companies and Southeast Asian companies. Some of my companies have been Indian founders and Southeast Asian founders who have now moved to US and focusing completely on the US market.
Great. And you can also share about Nexus at large.
Yeah, that we talked about earlier. Nexus is a global fund focusing on Indian digital story, as well as cross-border or global SaaS
Mhm.
story.
Great. What's the typical stage of investment?
Early stage. We love to engage with the founders as early as possible. If you look at my personal portfolio, almost 80% deals are pre-seed, which means at that time it was nothing but two founders thinking about a problem statement. So typically in Nexus, you will see probably 60-70% will be pre-seed or a seed deal, 20% probably Series A, and 10% on an exception basis we do Series B also. And you can understand that because of the size of the fund and given this nature, we take concentrated bets on a fewer number of companies, but then we keep doubling down on those companies through their journey with larger checks.
Absolutely. And what's the typical first check that you put
It
in?
can vary from anywhere from 500K USD to $10 million USD. It has been that wide a range.
Right. Where can founders apply in case there is a direct way?
Just reach out to me. I have my email ID, LinkedIn, phone number, everything put out over there at LinkedIn. So Twitter, DM. Uh, Believe me, if you reach out to me, you'll get an answer.
That's great. So we reached out to you and we got an answer. So yeah, that's definitely true. Last one, where can our listeners follow you?
Twitter, it's Anand underscore Datta 83 on Twitter. Obviously, I believe that with this podcast, you can probably share that. And on LinkedIn, it's very easy to find Anand Datta Nexus. You'll find me on LinkedIn. So both LinkedIn and Twitter are my more favored places where I put in my thoughts.
Right. Sure. I'll make sure to put all those links in the show notes below. Thank you so much for coming on, Anand. It was pleasure talking to you and loved all the insights that you shared on investing at Nexus.
Absolutely, my
Thank you.
pleasure, Prashant. And thank you for having me.
Absolutely. Thank you.